When you rethink things, you can make better decisions. Otherwise, you might still consider this fashionable, or kept this as your dream car. Remember when you thought this was a good way to do business? Today, as you enjoy your life and your wealth, it may be time to rethink insurance. There's a misconception that insurance isn't necessary if you have money. But the reality is, the more you have to lose, and the more you need to maintain your lifestyle, like vehicles, travel, tuition, properties. Did you know that insurance can actually help protect your wealth? It protects in two key areas: your human capital and your financial capital. Human capital may sound ominous, but it's really the value of your future earning potential. The closer you get to retirement, the less time you have to earn. But you may still have years left to work, and these future earnings are worth safeguarding. Many people struggle to maintain their lifestyle after a major health incident. But the right insurance solution can help protect your income stream in the event of a disability or critical illness, or even an early death, by providing cash so that you or your family or business partners don't have to liquidate your investments. Now let's talk about your financial capital. This is measured by your assets like real estate holdings, businesses, and investments. When people think of investments, they often think of their GICs, mutual funds, and stocks and bonds that are in their registered or non-registered savings accounts. To understand how insurance protects financial capital, it's helpful to think about the role that tax plays, because typically, the more money you have, the higher your marginal tax rate. An RRSP allows you to defer paying tax, but only until you take it out in retirement. The higher your annual income in retirement, the more tax you'll pay. You'll also pay tax on investment gains on your non-registered savings. And a TFSA provides tax-free growth too, but you can only contribute a relatively small amount of money each year. Permanent life insurance can also be used as an investment and may provide a superior rate of return than some other investments. If you include a permanent life insurance policy in your portfolio, it may provide tax-preferred growth and will provide a tax-free death benefit to cover your estate costs, helping you plan for your legacy. We're just scratching the surface on how insurance protects wealth. Your advisor is key to helping you integrate it into your plan. So, just like big hair and bigger phones, it's time to rethink what you think about insurance.